Right, we went over risk to reward ratio. Do not risk more than 2% of your account at any given time. Let's get on to the capital. Let's talk about mini accounts. I trade my mini accounts even though I may have $6,000 to $7,000 in my account. I prefer trading a mini account. Now this is formulas, mathematical formulas. It's not mine. You do a search on the net, you'll come across this. Professional traders follow this. The position size for a mini account is E is your equity divided by the figure 500 into bracket -1, which simply means that if I've just fed this into it, that if my account equity, if I start my account with $3,000, I can trade a max of 5 mini lots. Right? Let's say that I started an account with $2,000, and I've just fed this formula over here. $2,000, I can trade a minimum of 3 lots at any given time. Now, once I said that we go ahead with multiple lots, 3 lots is what I have. So which means that if I have $2,000 in my account, I can take one trade at a time of 3 lots. Until the time the trade is not closed for a win or a loss, I cannot take another trade, because that's what the figures are saying. Now let's take the example of, let's say somebody starts an account with $300, right? This is what the brokers tell you. Open an account with $300 minus 0.4. Mathematically, you should not even think about taking any position when you have $300 in your account. Let's say if I have $1,000 in my account, 1 mini lot, not recommended again. Bare minimum, you can go ahead. Okay, you have $1,000, trade 1 mini lot. Once again, it puts you at a disadvantage because you're trading with 1 lot. So what is the minimum amount of capital required, which is the topic that we are discussing? For a mini account, folks, believe me, I would recommend $3,000. Minimum $3,000. If you do not have $3,000 to open an account, my recommendation would be wait till you gather that capital and then open that capital, because if you are going to open an account with about $1,000 or $500, believe me, you will give it away to the market. It's a write-off. I may sound very crude about it, but this is a fact. I've seen it in a lot of traders. So instead of wasting that money, you might as well put it somewhere else or save it up, or go ahead with some kind of a course which will improve your efficiency, improve your trading a little bit. Or for that matter, if you do have a small capital, trade micro accounts. You have micro accounts. A lot of brokers give you micro accounts today. With $500 in a micro account, you can trade 4 micro lots. So your rules of money management they are followed, but then there's a disadvantage. Let's say, for example, you're in a trade which is giving an expected profit of, let's say, 50 pips. On a mini account, you would have made $50 on a mini account, right? Because 1 pip is equivalent to $1. On a micro account, you will make only $5 of profit if you put it down in terms of money, not pips. So if you're trading on a 50 pip move and you're waiting for that, and you come out at the end of the trade with only $5 in hand, it frustrates you. It does. I mean, let's be practical about it, right? I'm not sitting here for 4 hours in front of my computer and I come out with only $5 in my account. I mean, what the hell? What am I doing this for? No, I need $50 in my account for a trade. So then what you do, if you're trading micro lots and you have only a little bit of a capital, you start bending the rules. And you say, oh, this trade looks good. Doesn't matter. I mean, I know Sunil said that. I mean, he's right in his own way, but this looks like such a good trade. I'm sure I'll make money out of this. So you increase your capital exposure, right? Instead of mini lots, instead of the 1 mini lot that you would ideally trade, you go ahead and trade with 3 mini lots. And what you're doing, you're increasing the exposure. Now let's get down to the charts. Let's correlate all of this to the charts. Let me share my charts right now. All right. Berkey, could you repeat that before you say 2%? What was the question? All right, charts okay? Can you see the charts? Could you just confirm, please? The number one on that simulation trade website was your expected profitability. So risk to reward ratio, that was your reward. Or were you asking about your rules of money management? Risk to reward ratio working. 2% is rule number 2, never risk more than 2%. Rule number 1 is your risk to reward ratio should be a minimum of 1:2. Alright, now let's take this particular example. Right, we are correlating everything onto the charts. Let's go ahead with the 5-minute chart. I had a 5-minute chart over here. Oops. There you go. Alright. Alright. Now let's say that I open an account with, I have $500 with me. Let's say I have $1,000. As per the Excel sheet, I can trade only one mini lot. I'm trading mini lots. I don't want to trade micro lots, because if I have an expected move of say 25 pips, in a mini lot I'll make $25. In a micro account I'll make $2.5, which I don't want. Right, so let's say I'm trading on a 5-minute time frame. Let's take, for example, now let's take this as a divergence. Let me just put this. Right, for those of you who are familiar with divergence on a 5-minute time frame, this is a divergence, right, where you can see, let's just zoom this inside a little bit, where price makes a high and a higher high, right, and your stochastics, any oscillator makes high and a lower high. This is a classical example of a bearish divergence, so you expect price to reverse towards the downside. And I said that, okay, this looks good now, this is a good divergence, this is a good setup, and I can enter in a pretty nice trade. Now I have only $1,000 in my account. I'm supposed to trade with only one lot, but with one lot I follow my rules of money management, saying that I will not exceed more than 2% of my account. Right, now 2% of my account on a $1,000, how much is 2% on 1,000? It is $20. So which means if I'm trading on a 5-minute time frame, my stop loss cannot be more than $20, 20 points if I'm trading on a mini account. Let's say that I always keep my stop above the previous high, where price reversed from, just above the high. And let's assume that I enter the trade somewhere over here. Why am I taking this? Because this is a good level of support resistance. Right? Can you see this? Just simply looking at price found resistance over here, then found support, and then found support subsequently, of course. So I'm just choosing this. This ideally should be your entry. Let's say my target is somewhere down over here. Let's take another good support resistance level. I'm just taking it randomly, so the resistance turn support is expected to move down, so I would say it moves down. Risk to reward ratio, first let's come across 1:2. It definitely is, right? So I have a stop at 1.0511. My entry is at 0.506, which is just about 5 points off stop. Expected profit is 0.489, which is about 17 points. So risk to reward ratio is definitely more than 1:2. How do you enter on divergence trades? Sanjay, you'll have to pay me for that. I'm just kidding, folks. A divergence, the techniques that we have, they are very, very precise. To be quite frank, I cannot just go over this and say that, okay, this is where you enter and this is where you exit and this is where you put your stops, because this is part of the courses. For that matter, I'll just discuss this. We are having the next London workshop, where divergence as a technique is a topic of the workshop. It's one of the most effective trading systems. I have taken divergence to the next level, where only if these conditions fulfill, if I use this, I enter the trade and my risk to reward ratio is good, the possibility of success is very, very high.